Hello and welcome. I'm excited to be here with you today as we embark on a fascinating journey into the world of Bitcoin. Bitcoin is not just a digital currency. It's a groundbreaking technology that has been shaping our financial systems and the way we think about money. In this video, we'll delve into the history of Bitcoin, where it came from, how it has evolved, and where it might be heading. We'll look at the key moments in Bitcoin's timeline, its major milestones, the challenges it has faced, and its impact on the world. Whether you're new to the world of cryptocurrencies or you're a seasoned investor, this video will offer insights and perspectives that will help you understand Bitcoin better. So, buckle up and get ready to dive into the captivating story of Bitcoin. Let's get started. Hello and welcome. I'm excited to be here with you today as we embark on a fascinating journey into the world of Bitcoin. Bitcoin is not just a digital currency. It's a groundbreaking technology that has been shaping our financial systems and the way we think about money. In this video, we'll delve into the history of Bitcoin, where it came from, how it has evolved, and where it might be heading. We'll look at the key moments in Bitcoin's timeline, its major milestones, the challenges it has faced, and its impact on the world. Whether you're new to the world of cryptocurrencies or you're a seasoned investor, this video will offer insights and perspectives that will help you understand Bitcoin better. So, buckle up and get ready to dive into the captivating story of Bitcoin. Let's get started. Let's start by understanding what Bitcoin is. At its core, Bitcoin is a type of digital or virtual currency, known as a cryptocurrency. Cryptocurrencies are a form of digital asset based on a network that is distributed across a large number of computers. This decentralized structure allows them to exist outside the control of governments and central authorities. Bitcoin was the first cryptocurrency, and it remains the most well-known and valuable. It was introduced in 2008 by an unknown person or group of people using the name Satoshi Nakamoto. The actual identity of Satoshi is still a mystery. Bitcoin transactions are verified by network nodes through cryptography and recorded on a public ledger called a blockchain. Bitcoin can be exchanged for other currencies, products, and services, and it is often used as a store of value, similar to gold. One of Bitcoin's key features is its limited supply. There will only ever be 21 million Bitcoins. This scarcity is one of the reasons why Bitcoin is valuable. Another important feature of Bitcoin is its decentralization. No single institution controls the Bitcoin network. This puts some people at ease because it means that a large bank can't control their money. So, in summary, Bitcoin is a decentralized digital currency, without a central bank or single administrator, that can be sent from user to user on the peer-to-peer Bitcoin network without the need for intermediaries. Remember, this is a very basic explanation. The actual workings of Bitcoin and cryptocurrencies are far more complex, involving intricate concepts from cryptography, computer science, and economics. But for the purposes of this video, this description should provide a good foundation. Before we delve deeper into Bitcoin's journey, it's important to understand the technological and conceptual foundations that made Bitcoin possible. Bitcoin did not emerge in a vacuum. It was the culmination of several decades of research and experimentation in cryptography and digital currencies. One of these foundational concepts was hashcash. Invented by Adam Back in 1997, hashcash was a proof-of-work system designed to limit email spam and denial-of-service attacks. The idea was that it would require a significant amount of computational power to send spam emails, making it economically unviable for spammers. This proof-of-work concept was later adopted by Bitcoin to secure its blockchain. Another significant precursor was B-Money, proposed by Wei Dai in 1998. B-Money was an anonymous, distributed electronic cash system, although it was never actually implemented. B-Money's proposal had elements of what would eventually become Bitcoin, such as the concept of a distributed ledger, a key component of Bitcoin's blockchain. There were also other attempts to create digital currencies, like DigiCash and e-gold, but they ultimately failed due to various reasons, including regulatory issues and lack of trust. It's also worth mentioning that the cypherpunk movement had a huge influence on the creation of Bitcoin. The cypherpunks were activists advocating for the use of cryptography and privacy-enhancing technologies as a route to social and political change. So, when Satoshi Nakamoto created Bitcoin, he didn't start from scratch. Instead, he built upon the ideas and technologies that had come before, combining them in a new and innovative way that addressed some of the problems faced by previous digital cash systems. Now let's move on to the birth of Bitcoin itself. The story begins in late 2008, when a white paper titled, Bitcoin, a peer-to-peer electronic cash system, was published by an individual, or possibly a group of individuals, under the pseudonym Satoshi Nakamoto. The Bitcoin white paper laid out a revolutionary concept, a decentralized digital currency that didn't require a central authority. It proposed a system where transactions could be verified by a decentralized network of computers, or nodes, then added to a transparent and immutable public ledger, which we now know as a blockchain. The white paper introduced the concept of using a proof-of-work system to create and manage the currency. This system, borrowed from earlier concepts like hashcash, involves solving complex mathematical problems to validate transactions and secure the network. The reward for this work is newly minted bitcoins, a process known as mining. One of the most profound ideas in the white paper is the solution to the double spending problem, a major hurdle in digital cash systems where a single token can be spent more than once. Bitcoin's solution was the implementation of the blockchain, where each transaction is linked to the previous one, making it nearly impossible to double spend. The Bitcoin white paper was groundbreaking because it solved problems that had stumped previous attempts at digital currencies, and it did so in a way that maintained decentralization and user privacy. It was truly a revolutionary concept, and it marked the beginning of the era of cryptocurrency. Remember, this is a high-level overview. The actual white paper is filled with complex details and is highly technical. If you're interested in a deeper understanding of Bitcoin's mechanics, I highly recommend giving it a read. Following the release of the Bitcoin white paper, the actual Bitcoin software was made public in January 2009, and the Bitcoin network was launched. Satoshi Nakamoto mined the first block of the Bitcoin blockchain, now known as the Genesis block, or Block 0. This block included a message referencing a headline from that day's edition of The Times, Chancellor on brink of second bailout for banks. This was seen as a commentary on the instability of the traditional financial system. The first transaction occurred soon after, when Satoshi sent 10 bitcoins to a computer scientist named Hal Finney. Hal was one of the earliest supporters and contributors to the Bitcoin project. In the early years, Bitcoin was mostly a project for enthusiasts and had little monetary value. That changed in May 2010, in what is now one of the most famous stories in Bitcoin history. A programmer named Laszlo Hanyecz purchased 2 pizzas for 10,000 bitcoins, marking the first time Bitcoin was used to purchase physical goods. Today, those 10,000 bitcoins would be worth a fortune, and this event is commemorated every year on May 22 as Bitcoin Pizza Day. During this time, Bitcoin began to attract a larger community. More people started mining, and exchanges started to appear, allowing people to buy and sell Bitcoin for traditional currencies. It was the start of Bitcoin's journey from an interesting computer science experiment to a globally recognized financial instrument. I will provide a summary of key events and milestones in the history of Bitcoin. 2008, a white paper titled, Bitcoin, a peer-to-peer electronic cash system, was published by an individual or group using the pseudonym Satoshi Nakamoto, outlining the theoretical framework for a decentralized digital currency. 2009, the Bitcoin network came into existence on January 3 with the mining of the first block, known as the Genesis block, or Block 0 feet. The first open-source Bitcoin client was released by Satoshi Nakamoto in January, and the first Bitcoin transaction, from Nakamoto to Hal Finney, took place on January 12. 2010, Bitcoin was valued for the first time as 10,000 BTC were used to indirectly purchase 2 pizzas delivered by Papa John's. This event is now celebrated as Bitcoin Pizza Day. The Mt. Gox exchange was established in July, and the Bitcoin market, the first Bitcoin exchange, was established in February. 2011, other cryptocurrencies began to emerge, based on Bitcoin's open source code. Notable entities like the Electronic Frontier Foundation and WikiLeaks began accepting Bitcoin donations. BitPay, a Bitcoin payment processor, was founded. 2012, Bitcoin started to gain more mainstream attention and adoption, with BitPay reporting over 1,000 merchants accepting Bitcoin under its payment processing service and WordPress starting to accept Bitcoin. 2013, Coinbase, another significant Bitcoin payment processor, reported selling $1 million worth of Bitcoin in a single month. The first Bitcoin ATM was launched in Vancouver, Canada. The University of Nicosia announced that it would be accepting Bitcoin as payment for tuition fees, marking a significant step toward Bitcoin's acceptance in mainstream commerce. In the same year, the FBI seized Bitcoin from the Silk Road marketplace during the arrest of Ross Ulbricht, and China's central bank prohibited Chinese financial institutions from using Bitcoin, causing a significant drop in Bitcoin's value. 2014, more notable businesses started accepting Bitcoin, including Zynga, Overstock.com, and Dell. The Bitcoin network's hash rate exceeded 100 petahash/sec. However, the year was also marked by the collapse of Mt. Gox, one of the largest Bitcoin exchanges at the time. The U.S. Commodity Futures Trading Commission approved the first Bitcoin financial product, an over-the-counter swap product based on the price of Bitcoin. 2015, Coinbase raised $75 million in a Series C funding round, setting a new record for a Bitcoin company. Bitstamp, a UK-based Bitcoin exchange, was taken offline following a hack that resulted in about 19,000 Bitcoins being stolen. 2016, the year saw the halving of the Bitcoin block reward for the second time, reducing the reward from 25 BTC to 12.5 BTC per block. This event highlighted the scarcity of Bitcoin and its deflationary nature, drawing attention from investors and the media. 2017, Bitcoin experienced a historic bull run, reaching an all-time high price of nearly $20,000 in December. This surge in value sparked a wave of mainstream interest and media coverage, attracting a broader audience to Bitcoin and other cryptocurrencies. Additionally, the Chicago Mercantile Exchange, CME, and the Chicago Board Options Exchange, CBOE, launched Bitcoin futures contracts, providing institutional investors with a regulated platform to trade Bitcoin derivatives. 2018, following the euphoria of the previous year, the cryptocurrency market experienced a significant correction. Bitcoin's price plummeted throughout the year, reaching a low of around $3,200 in December. This market downturn led to a period of consolidation and reflection within the industry, prompting discussions about the long-term viability and potential regulation of cryptocurrencies. 2019, despite the market downturn, Bitcoin continued to mature as an asset class. Several institutional players, including Fidelity Investments and Intercontinental Exchange, ICE, announced plans to enter the cryptocurrency market. The Lightning Network, a second-layer scaling solution for Bitcoin, gained traction, promising faster and cheaper transactions. This year also marked the launch of Facebook's Libra project, which later evolved into the Diem Association, aiming to introduce a stablecoin backed by a basket of global currencies. 2020, Bitcoin demonstrated its resilience during times of economic uncertainty. The global COVID-19 pandemic led to significant market volatility, causing traditional financial markets to experience downturns. Bitcoin, often referred to as digital gold, attracted attention as a potential hedge against inflation and economic instability. Institutions such as MicroStrategy and Square made significant investments in Bitcoin as a treasury reserve asset, further validating its role as a store of value. 2021, Bitcoin reached new heights as institutional adoption accelerated. Tesla, led by Elon Musk, announced a $1.5 billion investment in Bitcoin and started accepting it as payment for its electric vehicles. Traditional financial institutions, including major banks and asset management firms, began offering Bitcoin-related services to their clients. Bitcoin's price soared to over $60,000, and the overall market capitalization of cryptocurrencies reached record levels. However, regulatory scrutiny intensified, with governments worldwide considering regulations and frameworks for cryptocurrencies. This summary covers key events and milestones in the history of Bitcoin from 2016 to 2021. It demonstrates the continued growth, adoption, and volatility of Bitcoin, as well as its integration into traditional financial systems. As the story of Bitcoin unfolds, further developments and challenges await, shaping the future of cryptocurrencies and their role in the global economy. Since 2021, Bitcoin has experienced significant growth and development, though it has also faced certain challenges. In 2021, Bitcoin reached an all-time high, with values exceeding over $65,000 in November. This price hike was connected to the launch of a Bitcoin ETF in the United States, as well as events involving Tesla and Coinbase. However, by the end of 2022, Bitcoin prices had fallen to around $27,245.471. JP Morgan analysts predict that Bitcoin's price should currently be around $45,000, due to its correlation with the price of gold. They also mention the upcoming Bitcoin halving, due to take place next year, which is expected to increase its price. However, regulatory and economic pressures are weighing down on Bitcoin's price. The number of daily Bitcoin transactions has grown significantly, by 89% from mid-April to mid-May 2023, but the number of active Bitcoin wallets is falling, possibly due to rising fees. Additionally, Bitcoin's correlation with Ethereum has weakened, indicating a shift in investor perceptions of these two cryptocurrencies. Bitcoin Cash, one of Bitcoin's most well-known forks, underwent an upgrade that allows tokens to be issued on its network and enables decentralized finance applications. Regulatory developments have been occurring globally, with many jurisdictions enacting or on the brink of enacting regulatory schemes for digital assets. This is seen as a necessary step for traditional financial institutions to engage with digital assets and for crypto firms to expand their regulatory expertise and compliance oversight. The current state of Bitcoin can be summarized as follows. As of June 1, 2023, the price of Bitcoin was roughly around $27,245.47, a significant decrease from its all-time high of over $65,000 in November 2021. This price drop in 2022 was largely due to a major crypto exchange, FTX, filing for bankruptcy. Analysts at JP Morgan suggest that Bitcoin's price should be around $45,000, based on its correlation with the price of gold. They also predict a price increase due to the upcoming halving in the first half of 2024, a process that reduces the Bitcoin miner rewards and makes the cryptocurrency more scarce. However, regulatory and economic pressures continue to weigh down on Bitcoin's price. The activity level of Bitcoin appears to be increasing, with the number of daily transactions growing by 89% from mid-April to mid-May 2023. However, the number of active Bitcoin wallets is falling, possibly due to rising fees for interacting with the network. Bitcoin's price correlation with Ethereum is also decreasing, suggesting a divergence in how investors perceive these two cryptocurrencies. Bitcoin Cash, a well-known fork of Bitcoin, has recently upgraded to allow tokens to be issued on its network. This upgrade also seeks to enable decentralized finance, DeFi, applications on Bitcoin Cash and increase transaction speeds. Regarding its impact on the world and adoption, many countries are making progress in regulating digital assets. The European Union is finalizing the new markets in crypto assets regulation, Dubai authorities are setting up a virtual assets authority, and the UK government intends to make crypto assets a regulated financial instrument. In the United States, progress is being made to advance legislation on digital assets, but the timing of such legislation remains uncertain. This trend towards regulation is global, with many jurisdictions either enacting regulatory schemes for digital assets or preparing to do so. This offers traditional financial institutions the clarity to start building their digital assets offerings. For crypto-native firms, regulatory clarity could mean expanding their regulatory expertise and compliance oversight. Bitcoin, like any technology, has faced its share of crises and issues over the years. Here are some key examples. Mt. Gox hacking. Mt. Gox was a Bitcoin exchange based in Tokyo that handled over 70% of all Bitcoin transactions worldwide in 2013. However, in 2014, Mt. Gox suspended trading and filed for bankruptcy, revealing that about 740,000 Bitcoins, around 6% of all Bitcoin in existence at the time, had been stolen. This remains one of the biggest crises in the history of Bitcoin, leading to a significant drop in Bitcoin's price and shaking the trust of many in the security of cryptocurrency exchanges. Scalability issues. The Bitcoin network has faced criticism for its scalability issues. Specifically, the network's design limits it to processing about 7 transactions per second, TPS, a far cry from traditional payment networks like Visa, which can handle tens of thousands of TPS. This issue became particularly pronounced during periods of heavy usage, leading to slower transaction times and higher fees. Various solutions have been proposed to address this issue, such as increasing the size of blocks in the Bitcoin blockchain, the method adopted by Bitcoin Cash, off-chain transactions in the Lightning Network, and segregated witness, SegWit, to optimize the storage of transaction data. Energy consumption. Bitcoin mining, the process of verifying transactions and adding them to the blockchain, requires a significant amount of computational power, and therefore energy. The Bitcoin network's energy consumption has been likened to that of some countries, leading to criticism about its environmental impact. This issue has been particularly contentious in areas where electricity is predominantly produced using fossil fuels. While these crises and issues have posed significant challenges, they have also led to ongoing discussions about how to improve the design and governance of Bitcoin and other cryptocurrencies. For example, the scalability issue has spurred a variety of technological innovations and debates within the Bitcoin community, while the energy consumption issue has increased interest in more energy-efficient methods of verifying transactions, such as proof of stake. The future of Bitcoin and cryptocurrencies. Bitcoin price. As of June 2023, Bitcoin's price stands at around $27,245.47. This came after an all-time high of $65,000 in November 2021, which was associated with the launch of a Bitcoin ETF in the United States, Tesla's acquisition of $1.5 billion worth of Bitcoin, and the IPO of Coinbase, the US's biggest crypto exchange. However, the market changed significantly in 2022 after another crypto exchange, FTX, filed for bankruptcy. According to JP Morgan analysts, Bitcoin's price should be around $45,000 due to its correlation with the price of gold. However, regulatory and economic pressures are weighing down its price. The next Bitcoin halving is expected to take place in the first half of 2024, which historically has led to an increase in its price. Bitcoin activity. The number of daily Bitcoin transactions has grown by 89% from mid-April to mid-May 2023. However, the number of active Bitcoin wallets has been falling, possibly due to rising fees for interacting with the network. Interestingly, the correlation between Bitcoin and Ethereum has weakened compared to the past years, suggesting that they are perceived differently by investors. Bitcoin as a hedge asset and Ethereum as an emerging market after its transition to POS. Regulatory outlook. Regulatory actions and policies are playing a crucial role in the future of Bitcoin and other cryptocurrencies. Global standard setters like the Financial Stability Board, Basel Committee on Banking Supervision, and Financial Action Task Force are working to set market expectations. Countries around the world, including the European Union, the United Arab Emirates, and the United Kingdom, are in various stages of finalizing crypto regulations. In the United States, there has been progress in advancing legislation on digital assets, but the timing of such legislation is uncertain. Technological developments. Bitcoin's forks, like Bitcoin Cash, BCH, are also evolving. BCH has undergone an upgrade allowing tokens to be issued on its network, aiming to enable DeFi applications and increase transaction speeds. This move was likely implemented due to the recent hype surrounding Bitcoin's BRC-20 tokens. In conclusion, the future of Bitcoin is dynamic and complex, with many factors playing a crucial role. The price of Bitcoin has experienced significant fluctuations, And while it's currently lower than its all-time high, future events like the next Bitcoin halving could potentially boost its price. We're also seeing interesting shifts in Bitcoin activity, with transaction numbers increasing but active wallets decreasing. Globally, regulatory bodies are working hard to establish policies to govern the crypto market, which can significantly impact Bitcoin's future. Technological developments, especially with Bitcoin's forks, are another important aspect to watch. That's it for today's video. If you found this information useful and want to stay updated on the latest in Bitcoin and cryptocurrency, don't forget to subscribe to our channel. Feel free to leave a comment below if you have any questions or insights to share. And if you enjoyed the video, please hit the like button. It really helps us out. Thanks for watching and stay tuned for more updates.